Last story. We've been talking. I mean, I'm a fanboy for Ken Carson. I mean, I'll just say that flat out.
Super smart
I'll
guy.
be a fanboy for anybody who's been like super right and like calling the shots, 8 ball corner pocket. I mean, this guy's really been doing it. So I just want to play a quick video from him over here.
Mr. Jem Karsan comes back to a senior managing partner at Kai Volatility Advisors. You were talking to us about melt up into the end of the year last time we spoke.
2 weeks away from the election. We've been talking about this for a while. And just as importantly, inching towards that end of the year piece we've been talking about. So both those things playing together to a very powerful kind of dynamic.
Is that when the market lets go of that election tension?
Exactly. So the wall of warrior, all these adages you hear actually have fundamental underpinnings. And those are actually supply and demand on insurance. When people are afraid that there's risk in the market, people go buy puts. Right? And that pushes up the price of those puts, the delta of those puts, the premium paid. And that increases the amount of move that we need in order for those things to be in the money.
Yep.
And if they don't go in the money, at the end of the day, dealers or the street or whoever's warehousing that risk has to buy it back. We've talked about this enough. Those entities are short December puts. And they have been for years, because December starts with leaps. And as it rolls forward, it's also where all the structured product issuance, which is at record highs, comes in. All of the positioning is back there at the end of the quarter.
Mechanical calendar stuff.
Mechanical calendar stuff. But importantly, it's that increase in the skew and the hedging is only supplemented by the election when the election happens, right? So all of that put positioning has created a very, very high skew. A record high skew in the back of the curve. That skew at some point has to come out of the market. Either in one of two ways. Either we need to move down through it so it no longer is skew, which is increasingly unlikely, or it needs to be taken out and the deltas that are hedging it some way or another have to get bought back and the trade needs to be locked in. That is the way markets work. This is supply demand.
How far out does that skew go past November?
So you see it all the way out into January.
Wow.
But the
so
peak,
it's inauguration basically skew almost?
the peak is December 20th.
Okay.
But everything around it is, it's a big lump.
Okay.
Right? And December 20th, because that's when the electors actually place the vote.
That goes back to your mechanical point.
Exactly.
Kind of pushes it forward from the inauguration a little bit.
Although I would argue that the December 20th, the reason for that peak is less because that's the date and more because that's December OPEX. And that positioning has been in the market. It's already short. It's a function of supply and demand. And everybody's short. They just, people aren't willing to digest it and take it off the table because there is some risk there. And they're already all short. What we saw actually, what happened is in August when we got that big push down, the skew and the vol in the front of the curve, people owned against this short in the back. And part of the reason that we returned so quickly from people were hedged.
Oh, wonderful.
Yeah. So as we rallied back, though, what happened? Well, the skew in the front came down, but still, what everybody was short and they got hurt on, still has remained high and only gone higher.
So then there has to be, I guess, or does there have to be anything else in one's analysis right now of whether or not there's going to be a contested election?
Of course. I mean, you can't ignore the election. The election matters, to be clear, more than for what happens in November and December. What happens in January,
Correct.
February.
There you go. You told us that before as well, and that's where I'm really siding on that, where it doesn't really matter so much either side maybe. I mean, you could get into that debate, right, but like, is it really worth the time?
What it will matter for in the short term after the election is the rotation.
Okay.
And it will matter in terms of maybe size and scale. And speed of move.
Okay.
But I think, if you're betting long short in the market, the event passes, there's very supportive flows. Your downside with any size move is going to take, it's going to take a colossal move, something to happen.
All right, so that's the idea there. So Cam has been talking about this idea of this melt up in the stock market for almost the entire year now. And he was right last year. There was going to be a melt up because the stock market was up, I believe something like 15-20%. And so there's this mechanism where there are people who their portfolios have a larger value. And so there's all these people and institutions that then have to reinvest at extra collateral at the beginning of next year. That gets front run by people who know that process is going to happen in the new year. So it happens in November, December, which is called the Santa Claus rally. The average increase in a period of inflation in election years is 20%. I did not anticipate 40% for the S&P, right? We're at 40% right now. And he's making
Is
the
that year
case
to
that we're
date,
not
by
even
the
going to.
way?
Sorry?
Is that year to date, by the way?
1 year, sorry, 12 months.
Oh, 12
Year to
months.
date,
Okay.
it's year to date on the SPY is.
So 37% for 1 year as of today, 22%, 23% year to date. But
That's
still,
right.
yes, very surprising upside this year.
And the idea is that he suggested we're not even done that upside because this Santa Claus rally that he's talking about hasn't even started. So who knows what happens? I think we're up 129% on the SPY. Is it over the last 2 years, something like that? I mean, we did have a big low in 2022, but yeah. So the trade here, I mean, it's the calls for Q1, Q2 are not expensive compared to what they should be with the type of moves that we're going to have, and single stock names that have momentum and hype behind it, such as the Nvidia stock, Tesla. Um, uh, these are likely to move even more significantly, just crazy GameStop ways up until we get to the nervous period of mid-January to March, where another window of collapse happens. And so this is, I mean, I'm just going to call this segment Karsan was right, the Karsan corner, because we're seeing that actually occur. I'm struck by the way that he was talking there is exactly the way you were talking in the Kalshi debate, the fierce debate we were just having, where it's about the mechanics of the participants within the market looking for their edge to play. It has nothing to do with should the market be up. That has no bearing on anything. It's these are the flows, and this is the way that the major participants are going to be able to capitalize on it, and they could care less whether or not it was the real price for the actual asset. So, like, I could totally. So that his explanation must be right up your alley for how you think everything should work.
Until we reach extremes, right? Anytime we reach extremes, that's where everybody steps in to head for the reversal, right? Same thing happens in options markets.
Right. So I just wanted to mention this because we've been saying this, I think, week after week. I mean, SPY up, assets up. I mean, index assets are up, right? I think the Dow was even down. Index assets are up. Anything that has these passive flows automatically to them, any assets that are automatically bought by 401ks, that are automatically bought by pension funds, by sovereign entities. There's no real
Even
reason
gold is back up again.
well, the central banks are buying gold like crazy, which I know, like, seeing gold up from central banks means problem with the financial system, but you never know when that's going to happen because they think in terms of like 5-10 years. So I don't know. But the dollar bounced. How hard did that dollar bounce off the lows? Man, I lost my shirt betting on the reversal of that dollar. It just skyrocketed
It
up.
was a big reversal too. I mean, a huge move. If you're in forex futures on the US dollar, you did quite well over the last 25 days or so.
So painful. I'm long the euro and it's just freaking diving. Fine, whatever. But the idea, that's what I'm say, do your own research, but freaking markets up unless there's a catalyst. I think he goes on to say in that video, if you want to check it on the YouTube, if China invades Taiwan on the day of the election, okay, fine, the volatility, the puts will get monetized, and then we're going to have a serious problem.
That's
But
right.
that's always the truth. Don't look up movie taught us anything, is that when the asteroid comes, okay, things are going to change. But until then, you just keep your head down and keep moving.